Okay. Um, I know this is after lunch, and hopefully the topic is not too dry, since we're talking regulation and domiciling in the financing world. And as we said, we have Marina Titova, who spoke in the morning, Olga Feldmeier, Ranzu Salovara, Jane Zhang, and Christopher Ems. And I'd like to introduce this discussion, if you allow, with two quotes that I had from an earlier presentation I made 2 years ago on regulation in Barcelona. Sorry. So one is from Alistair Tosh, FSA in London, 2005. And he said, what's the purpose of regulation? It's to promote fair markets, efficient, orderly, and clean markets, or to ensure that retail customers for financial services get a fair deal. I think that is what we need to ensure through regulation. I like this one very much from Barack Orbach, University of Arizona, 2012. Regulation is state intervention in the private domain, which is a byproduct of our imperfect reality and human limitations. So let me start with a very first question, a very simple one. Are ICOs regulated? Okay, so.
Yes, they are not regulated. And the basic ICO, that is the application token, that won't, in my opinion, probably ever be regulated because it's not financial instrument. It is an exemption just like loyalty cards or air miles.
Okay, so I guess we all agree that they're not specifically regulated. But
not at the moment.
Not at the moment, okay. But because you've been speaking before about how to regulate it or how to be compliant with regulations, right? Even if they're not specific.
Yes, so I would mention on that yes, the ICOs at the moment exist in a space from, say, light gray to dark gray, something that we have done with BCAP, which was effectively done in compliance with US securities laws. That I would say a bit more on the, say, lighter gray area. Some of the maybe a bit more convoluted structures that look very much like a security and yet are presented effectively as a use token, I would consider them more to be on the gray area. But having said that, there is no, hasn't been very specific regulatory clarity to date. And that is obviously very welcome to for the regulators to clear the situation for this market, given it's becoming a very significant capital market these days.
Okay,
that's true.
Christopher?
Yeah, I think you raise a valid point. The one thing that we always say when we talk to someone that's looking to start the process of getting together to do an ICO is if it looks like a duck, it acts like a duck, it's a duck. You can't change it from being a duck. So the fact is, I think the big word of warning that I would say, that as me, Chris M, saying, is if you do want to do something that looks like a security, acts like a security, performs like a security, just do it as a security. Cover your A.
I would like to add to this point. My name is Olga Feldmeier. I'm the founder and CEO of Smart Valor. I would like to add to this point is that it's actually, currently it's on us. We are doing some kind of self-regulation, right? And I can share this experience with you guys. Like we in Switzerland, we have a very open and proactive regulator who is still not actively looking in this space, but it will eventually. And for now, the way we can do it is just to create some kind of trust structure, which is normally foundation or some kind of company. Also to write a decent prospectus, which we call ICO terms, or some kind of prospectus, which declares risks of investing, putting money in this. Plus, of course, additionally, if you do KYC, not because you have to, but just to make sure that who are the people that are investing in those tokens. Those are all the things that will happen when it's regulated. But let's do it already today. The less trouble we will have later on, right?
Yep, Jane.
Okay, I'm going to talk from a different perspective. I'm from China. Why do we really care about regulation anyway, right? In my, we are asked for abuse, or it's like a abused spouse that asking for it, right? So you know, when actually these regulators come to discuss with you, but they don't understand what you are doing. And then they also ask, so what if somebody trick other people, right? That's their concern. I say people has the right to be stupid, as long as it's a free will, right? And then you being stupid, buying some coins, and then, whoops, get tricked, right? And then that's fine. Something happened. So why do we need to regulate and make a law to prevent people to be stupid? It's free will. They are stupid, right? In in my country, we have every country seems to have a national saint, right? Our national sin is people gamble too much. So before nobody gamble to make money. Ended up they all lose gazillion of money, right? But they have fun. They have, it's always about maybe I win next time, right? Okay, so if we redirect the energy from gambling towards funding some startups. Maybe startups don't intentionally trick you. It's just failed. A lot of business failed. It doesn't take the market risk out of the ICO world, right? And also, the second part is people love to play. When you guys have ICO in the West, they complain to me, Jen, do you have any way that I can get into it? I always cannot even bet. They use the word bet. So don't worry about them. So, people should educate themselves, take their own responsibility. You want to be stupid, fine. And then you are not stupid, fine. It is about a free will to make a choice. Either you get filthy rich because of that, or you have fun. So for me, regulation is not relevant here. So.
Thank you. I guess I lean a little bit towards Jane's interpretation, and therefore, I guess my next question is, shouldn't we be educating people just to be less stupid? And help me, please, to understand what an ICO stands for. So what are we doing with an ICO? Is it the equity? Is it the pre-sale? What other types of ICOs are we talking about?
I can start probably on that one. Yeah, so I always start by saying that the token has to be one of the 5 things. It has to be in-game currency, just like on the World of Warcraft or something. You play and you earn it, and then you can spend it on dragons and stuff. Or it has to be a loyalty program, or closed-loop payment system, software license, or straight-out donation, like, for example, Ethereum was when it was launched. And that way, all these are not, they currently not securities. I don't see that they somehow gonna turn into securities. But then immediately when you start to talk about royalties and kickbacks and any kind of a dividend or interest methods or voting rights in a company, then of course you hit to the Howey's test, and it becomes more and more like security. So you cannot say that ICOs will be regulated, because the token, depending on a white paper and mechanism that it works, it can be tens of different things. So you cannot come up with a one, yes, regulated, no, not regulated. That is like very uneducated way to look at it.
Exactly. And one of the key, characteristics of, token vice versa security. In US, you're talking about this Howey test. It's different country by country, right? In Switzerland, we don't have this test, right? It's more open, what is security and what is not, right? But the key characteristic is kind of, if you say this token has a utility, right? It's not paying dividends. Then it's pretty much clear that it's not equity share. You know, that's very simple, basic orientation points that, you know, I would like to share here.
Yeah, Swiss are good on that, right? But they say that it's either, if it doesn't have interest, is not debt or equity, Swiss are pretty much that then it's not security, right? That's what MME said, at least.
There is no definition in the book of law, because it's a very new concept, right? And we will probably have this discussion a little bit later, you know, when this thing becomes bigger and regulator starts to look into that, which is not currently the case, right?
I think it's going back to your point about as a community and as people who participate, you know, some of us more regularly than others, but at least some of us have probably in this room participated at least once in an ICO. It's about really being able to police that internally as well. It's not just good enough for us to go, okay, maybe coming into your point slightly here as well, to go, okay, you know, regulators are looking at the space, we're getting involved, some of us are being asked to give feedback on to different countries, different jurisdictions, but that's not good enough. We really have to, within our community, when we see something which is a real blinder of a Ponzi scheme, to put it in one word, to actually come out and really call it out as it is, and not just sit there and kind of go, oh, well, these people but these people are stupid, they're investing in it, but actually get out there and say something and really make sure that that isn't representative of what we're trying to do here.
Yeah, I would just add that we have quite a broad view, I guess, for the tokens and ICOs more generally. And part of the landscape that we see so far are all of the utility network type of tokens that Ransu you just mentioned. But then also we shouldn't discount the fact that there is perhaps even larger potential landscape for all the security type of tokens that would not be considered security, say in jurisdiction of issuance as Singapore, but they would still will be in the US or other major jurisdiction. And it doesn't mean that those deals should be excluded. The potential of capital market is great, and the big cap offering that we've done in compliance with securities laws shows that. So it's just a much broader landscape that we should keep in mind more generally.
Okay, I just want to emphasize on the meaning of tokens. So token is a mathematical term. If you look at it, it's a software. So if you think it's a coin, it can be programmed. So the meaning of this token can be different. You know, we are talking about ICO. We are trying to raise money for our business. That's one way of thinking about token. So if we are going to argue with the regulator, we were saying that we are issuing tokens. I suggest you don't talk like a coin. Coin is so much like a currency or some value reflection. But we are a technology company. We are, design a new contract or the way people interact through a tokenized. So actually it's software. So how can you tax software, right? So which law we violated that we are producing a coin which is software, right? Token not only can transfer value, they actually record the facts, right? Something happened. So I give you a token to record some facts happened. So how can you tax us by this token idea? So I think we are not security. So why you say people buy all our tokens is what did we buy? What these people bought. Actually, if you are really doing things, not just took the money and run, you are designing a software to record the facts for the people to interact or transact with each other. So I talked with our central bankers about that. So I say, where is the security idea? No, it's a software. So if we keep on just everybody here, just it's a software, they cannot do anything to us. So.
Okay. But isn't it true? I mean, initial coin offerings are designed to get funding for our venture, our project, or whatever. So how do we interpret this, or how do we account for it? Is it the source of income, or is it the liability towards the investor or towards the people just acquiring the tokens, right? Because in my mind, and I'm not a venture capital builder or anything like this, but if I see certain projects that have now made headlines in Twitter or anywhere else, you know, for two people just doing software, I hardly doubt that they need 20 million, right? So if I sit on 20 million and these start trading and now are capitalized at a 80 million value, my question is, do I need even income? Do I need operations? Because no natural source of income is revenues and not tokens or token sales, right?
I think you raise a really valid point there, and I think this moves maybe on to how good governance and structure of ICOs is our next point, right? So I was listening earlier to the VC chat and talking about, and I think it's true, not in all cases, but in, I'd say, a lot of cases. You know, if you give an entrepreneur $20 million, and this entrepreneur does not have to in any way struggle to make sure that his company hits those KPIs that he's got to hit to put food on the table. I mean, it doesn't take a brain surgeon to figure out it's probably not the best way to go. So I mean, is there an idea? And this is something we've been working quite heavily on. Is it healthy for someone to be given from the ICO raise the entire amount, or is that amount escrowed through milestones within the white paper, within a viable business plan that goes alongside that white paper that says, okay, you're building this platform, you're building this technology, right? So if you hit this one, you're going to get this much. If we hit this one, we're going to hit this much. And then as a community, though, that becomes a gold standard, right? And hopefully by doing that, I mean, that's a good, for me, in my opinion, that's a very good governance structure to have. It permits everyone that participates in ICO to really have a track, not just the track on the secondary market, which obviously that's one thing I'd say we cannot avoid, right? And why it is very important not to, in my opinion, not to dismiss regulation at all, right? There is a very strong secondary market aspect to what we are doing. You can't deny that. You look at people who have gone from making, $50,000 5 months ago to breaking $1 million this week, doing something or other in just, trading tokens, right? So we can't deny that. So I think the conversation that should happen now is how we basically create a good governance structure for every single ICO that there is out there. I don't know if anyone would agree with me. Oh.
Yeah, so definitely agree with you on the governance structure, and I think it is part of what you said, but the second part of it is to be really clear on how much funds you actually need to raise.
Right. Yeah.
I'm not a big fan at all of uncapped ICOs. I don't think the projects that realistically need $10 million should raise 150 or 200. That just doesn't make any sense. And we were, in our regular market update, we were one of the first to highlight this current, say, frothiness of the ICO market trend. And so we really overdue some sort of a healthy correction here at this point to make sure that only the quality project with appropriate business model raise the amounts of money that make sense. Then there is always, as you said, with underlying structure put in place in the aftermarket. And I think the second point that was raised initially, how it is treated. So in the case of, say, utility type coins, our two most recent clients were Storage and Civic. So that was treated as a revenue, that was treated as a product sale. And in case of Civic, for example, it is issued by a US company, and there is appropriate taxes paid on it as a revenue tax.
I would like to point out, I would like to take the contrary position. I'm a big friend of regulation. And I'm going to tell you why. Before that, I was heavily involved in regulatory process for Bitcoin company in Switzerland. Right, this company startup from Silicon Valley became first Bitcoin company to be properly regulated in Switzerland, and that means not applying for banking license, but getting specific license which suits this business. And my learning is, it's great when regulator cares. It's great when they're looking after that. And my big hope is that very soon, hopefully, Swiss regulator or Gibraltar or Singapore will look into that and we'll just make it possible on a legal ground. Because if you look at it, what is the difference between equity crowdfunding and ICOs? What is the different requirements? I mean, if we continue to do this kind of self-regulation as we do it now in Switzerland, with foundation, with ICO terms, you know, with knowing your customer, right? If you just continue that way, then the risk that something really bad happens is lower, A. And B, my big fear is, you know, that like regulator doesn't look in that and we just continue and then something really bad happens, like huge scam and millions are gone. And then what's gonna happen, you know, the regulator is gonna start investigation, right? Which would, you know, throw a bad shadow on all of these businesses, right? So if I could choose, you know, I would, you know, wish that regulators start to look into this as soon as possible before it gets bad.
Let me maybe make a last question on my end before we open up to the floor. In my mind, as Marina said, I need 10 million. I raise over 100. We see that capitalization, total token capitalization, is sixfold what it was 3 months ago. If these entrepreneurs or whoever has a project now needs to get liquidity to pay the marketing campaign, to recruit people, to pay salaries, how do they make this liquid? I mean, they have the tokens, that's great, smart contracts. Now I need the money. How do I get there?
So I think this is like any other kind of asset raise, right? If I go up to someone in the room here and I say to you, hi, can you please, you may have $2 million, can you give me $2 million for my idea or my company? You're going to say to me, yeah, I'll give you those $2 million, but what do you want them for? And I'm going to say, well, I'd like it because in Q3, I'm going to need to have a marketing team. I'm going to need to build business development team. And you put it all in a business plan, right? That's what you do. That's what you do. So why don't we apply the exact same principles to what we do, right? It's we can't just, you know, great, what we're doing is fantastic and amazing, and I think we're truly transforming the way the entire world works. But at the same time, you can't just say out with the old, in with the new. You need to take what was good of the old, and you know, we can look at you know, the largest tech companies in the world. They raised their asset raise using this theory that you don't just give people unlimited money, but you say to them, yeah, look, this is the floor of what I need, and this is how I'm going to use your money. And if I don't use your money in that appropriate way, then I'm not going to build my business. You're not going to give it to me. I think that's my opinion.
But I guess that wasn't the question. The question was, let's assume investors would invest in Ethereum or Bitcoin, any other crypto, or fiat money, even through exchanges. I'm asking now, this venture now needs the money, fiat money, to pay vendors, because vendors don't do it for crypto, don't do it for tokens. They want to get real dollars, real euros, or whatever.
Sure. So
how do you get liquidity if 100 projects start at the same time?
Well, then I think that's the interesting question. But I think that goes back to the point of regulation, right? The thing is, when you have regulation, you have liquidity in the fiat markets. It's, in my opinion, the only way you're ever going to have that is if you have a regulator that says that's okay.
Just use the OTC desks like they do now. So these guys, like what happened? That you use OTC desks like they do now. So over the counter. So there are these probably 5-10 small companies in not small, but in the world that do these big trades for hedge funds and professional investors, and now also for ICO clients. And that's the place where you can, like, you know, Binary or Cumberland or B2C2. These guys are the ones that you go then with $1 million worth of Ethereum or Bitcoin, and you start to, you know, trade those on a daily basis, but it takes time, of course, and that's why last week when we saw, 2 weeks ago when we saw big slump on Ethereum price, my understanding was that was because of Status and Bancor cashed out some of the ICO money. Not sure, but that's what I understood.
Exactly.
Is that confirmed?
So I just want to look at this from a different perspective. We are blockchain world. So why do you want fiat money? Or why are we here to begin with, right? I mean, you want fiat money, then you don't do business with me, right? Everybody, we don't do business, they all take out coins, right? Or whatever. So there is a mechanism called exchange, right? A lot of country has exchange that you can trade your fiat money, uh, uh, where you can change into fiat money for the investors. They can basically day one can change into fiat money anytime they want, right? So that is not a issue. The issue is if we try to think about things using the past, that how we do it today, to try to predict what the future will be. That is a non-starter from my point of view, or why we doing this innovation today, what we try to change, right? So what my point is, if you don't want to accept crypto coin, maybe you say, okay, I only accept Bitcoin or Ethereum coin, or maybe these coins have better liquidity. But if you say, oh, I want fiat money, I just say, get out of my sight, right? Basically, what do you do? Okay.
Thank you. Let's open it up to the floor. So if you have any questions to our panelists, please.
If they're not a security or not a currency, what's the VAT position on the sale of tokens?
I know. Who wants to respond to that one?
Official view.
To be honest, I'm not a lawyer and I'm not a tax advisor. It's difficult for me to comment exactly. I know that in the jurisdiction of issuance that we use, Singapore, it is effectively a tax-free ICO that it's able to achieve. But specifically on VAT, unfortunately, I can't comment exactly.
But if the app token is software license, then and you are on a bad place, then you have to pay VAT. So once again it goes back to that what is the token exactly?
In China right now, they define these in cryptocurrency as commodity. So if you're doing barter, it's like if you trade goods with it's called a barter. So it's tax free right now.
I guess the best answer, and I do this in Spain. In Spain, if you use it as a medium of exchange, then it's tax-free. If you mine, for example, tokens, then they are considered products. So it depends on the use case, right? Tax will be applied or not. To me, much more important is when does tax apply if you're transferring wealth? Because most countries also raise taxes on transferring wealth. And if we're transferring big amounts of money, you can't say this is software because it's wealth and this is a way to fund the business. So regulators will step in sooner or later, in my mind.
Hi, my name is Navroop. So I'm based in Boston, and we're looking into building a trading platform for crowdfunded equity. So one of the questions that I've been looking into for my own research is liquidity. I think there's a lot of talk about it, but one of the key questions, I think, is how much liquidity is enough liquidity for crypto markets? Because my sense is that there's always this push to, more and more liquidity, but is it also increasing systemic risk, for example? Do we need the same level of liquidity as in public markets, so on and so forth? So just want to hear some of the thoughts of the panel on the same. Thank you.
So yeah, probably I answer on that one then first. So both SEC and FCA in UK, they both have said that on equity crowdfunding, one of the big fall pits on that one is that normal people can invest. So then you can get unemployed, sick, divorced or something, and you have these beer company or bicycle company shares. So they have said that they want to see the secondary market for equity crowdfunding, if that's your question, right? Yeah, but if someone now says that I know how much it is, that person is lying because it's completely out of the yeah. So, but I think that we are far away from being on that there's too much liquidity because
And to add to this, you know, that comes to the fundamental question about are those projects proper, you know, proper projects for doing this publicly traded security? I mean, why do we have IPO? Why do we have publicly traded equity, right? Because, you know, only quite mature companies are secure enough to be proper investment for public that has no deeper insight into true nature of this investment. And normally you would say that early stage companies are actually not appropriate for publicly traded equity because just people are exposed to significant risks, right? And the you know, the role of the regulator is actually to protect people, to protect investors. And I mean, we've seen that in the history a lot of times. There have been penny stocks in years, there have been a lot of unregulated stories where investors lost money, right? So this liquidity that we have now, well, it's quite a great thing, and we've never had liquidity in this segment of growth companies. But that's actually a big question mark, right?
Yes, yeah, absolutely. I believe that after these application token ICOs, like, you know, kind of start to peak at some point, then the tokenized equity crowdfunding is the next big thing, because that will be like an equity crowdfunding 2.0, where shares are tradable, and that will you know, put the valuations higher, which are pretty low now on equity crowdfunding deals, many of those at least, and then make them more exciting also from the, because it becomes not just investing, but then comes the trading part. I know there's a, you know, inherent risk on that one, as you mentioned, but I think it's still overall good thing.
Any other question out there?
Actually, we're running over time, so I'll let you stop it here. Sorry, Vincent.
Thank you.